Nearly 100 years ago, Henry Ford proposed that it might be a blessing that most Americans were unaware of how the banking system operated. His reasoning was that if they did understand, there might have been a revolution overnight. While several decades have passed since Ford's statement, it remains as relevant today as it was in the 1930s. This doesn't imply that the concept of banking is inherently negative. On the contrary, banks offer valuable services and have become integral to our lives. Everyone seeks secure places to safeguard their money, and storing it under a mattress or burying it in the backyard is not practical. However, it's crucial to recognize that banks generate significant profits, often at the expense of the unaware public, due to their intricate and secretive operational structures. Irrespective of whether you're a borrower, spender, or saver, banks find various ways to profit from your financial activities. What makes this unsettling is that most people are oblivious to this financial extraction. The multiple revenue streams banks enjoy could explain why bank stocks have become a lucrative investment option. Here are some concealed truths about money that banks prefer you not to be aware of. Number 1. Continuous loss of value. When you deposit your money in a bank, it's typically viewed as a safe haven. However, the hidden cost that many people don't fully grasp is the impact of inflation. Inflation is the gradual increase in prices of goods and services over time. As prices rise, the purchasing power of your money decreases. For instance, if you have $1,000 in a bank account, and the annual inflation rate is 2%, that $1,000 will have the same numerical value, but its real-world purchasing power will effectively decrease by $20 in a year. This means that your money won't stretch as far in the future as it does today. The challenge here is that most traditional savings accounts offer interest rates that are often lower than the rate of inflation. So, while your money may grow nominally due to interest, it might not keep pace with rising prices. To combat this, individuals often turn to investments like stocks, bonds, or real estate, which have the potential to provide returns that outpace inflation and help your money grow over time. Number 2. Earnings from card transactions. When you make purchases using credit or debit cards, it may seem like a straightforward transaction, but there are underlying financial mechanics at play. Banks profit in two primary ways from card transactions. First, they charge merchants processing fees for facilitating electronic payments. These fees, often a percentage of the purchase amount, are collected by the bank. While the merchant bears the immediate cost, they often pass it on to consumers by slightly raising prices. As consumers, we ultimately pay these fees indirectly. Secondly, banks make substantial profits from credit card interest rates. If you carry a balance on your credit card, you're essentially borrowing money from the bank at an interest rate. These rates can be relatively high, and if you don't pay your balance in full each month, you'll accrue interest charges. Banks can adjust these interest rates over time, potentially increasing your borrowing costs. This practice underscores the importance of understanding the terms and conditions of your credit card and managing your balances responsibly. Number 3. Digital money. Modern banking has shifted from the physical handling of cash to digital records and electronic transactions. When you deposit money into a bank, your funds become part of a complex financial ecosystem. Banks use these deposits as the basis for lending to individuals and businesses, often through various forms of loans and credit. This practice, known as fractional reserve banking, enables banks to put deposited funds to work, generating income through interest charges on loans. While your money is available for withdrawal on demand, banks typically hold only a fraction of deposits in cash. This means that if everyone attempted to withdraw their money simultaneously, the bank wouldn't have sufficient physical currency to meet those demands. While the chances of a bank run are low due to regulatory safeguards and insurance coverage, such as FDIC insurance in the United States, it's a reminder that your deposits are effectively fueling the economy by providing capital for lending and investment. Number 4. Your banker's intentions. The personal relationships built between bankers and customers can sometimes blur the lines between trust and salesmanship. Bankers often employ relationship-building tactics to encourage customers to use various financial products, such as loans, credit cards, or investment services. While these relationships can be genuine, it's essential to remember that bankers often have targets and goals to meet, set by their superiors. This can lead to situations where customers are encouraged to take on financial commitments they may not have originally considered or even needed. It's crucial to maintain a level of skepticism and carefully evaluate whether a financial product aligns with your financial goals and needs. Ultimately, responsible financial decision-making should be guided by your individual circumstances and objectives rather than external pressures. Number 5. Hidden foreign transaction fees. When you use your credit or debit card while traveling abroad or making purchases in foreign currencies, you may incur foreign transaction fees. These fees are often imposed by your bank and can add up significantly over the course of a trip or multiple international transactions. Despite their impact on your finances, these fees are not always transparently communicated to customers. To avoid unexpected fees, it's advisable to check with your bank or credit card provider about their foreign transaction policies before traveling. Some financial institutions offer cards specifically designed for international use that either have lower or no foreign transaction fees. Additionally, exploring alternative payment options, such as prepaid travel cards or currency exchange services, can help mitigate these fees. Number 6. Regularly review your accounts. Neglecting to regularly review your bank accounts can leave you vulnerable to unnoticed fees, unauthorized charges, or even identity theft. It's essential to monitor your account statements and transactions regularly, either through monthly paper statements or online banking platforms. Many banks have mobile apps that make it convenient to track your account activity in real time. By staying vigilant, you can quickly identify any discrepancies or suspicious transactions and report them to your bank for investigation. Under the law, banks are obligated to investigate and rectify unauthorized charges reported within a specific time frame, typically within 90 days. This protection is crucial for ensuring the security of your funds and financial well-being. Number 7. Financial surveillance. Banks are subject to stringent financial regulations, including the obligation to report suspicious financial activities to government agencies such as the Internal Revenue Service, IRS. These reports are crucial in preventing illegal activities like money laundering and tax evasion. One common trigger for reporting is transactions exceeding a particular threshold, often set around $10,000. The IRS uses these reports to verify whether taxes have been paid on significant financial transactions and to assess whether these transactions comply with legal regulations. While the vast majority of individuals engage in legitimate financial activities, these reporting requirements help maintain transparency and integrity within the financial system. Understanding these intricacies of banking can empower individuals to make informed financial decisions and navigate the financial landscape more effectively. It underscores the importance of financial literacy and vigilance in managing your personal finances. If you are looking for ways to make more money, I recommend you watch this video next. Do not hesitate to share this video with friends, subscribe to the channel, and share your thoughts on today's video. Thanks for watching, and I'll see you in the next one.